Welcome back to Investing Talk Podcast. Today we're zeroing in on Microvision. They're a company that's been making some calculated moves in advanced sensing technology, especially LiDAR for autonomous vehicles. You've sent over a really fascinating stack of materials on them, and our mission today is basically to unpack the financial health, their strategic direction, and what it all really means for them in a super competitive market. Think of it as a deep dive into the high-tech, high-stakes world of future mobility and industrial automation. Before we jump into all the details, if you find value in these deep dives, please do consider subscribing, liking, and maybe commenting on this episode. It really helps us bring more of these insights to you. And if you feel like supporting us a bit more, you can always consider buying us a coffee. The link's usually in the description.
It's interesting, this company, Microvision, they really represent that classic innovation dilemma, don't they? You have a company with significant intellectual property. They're making these strategic shifts, but they're also navigating this landscape that's just defined by intense competition. And they really need some substantial commercial breakthroughs to really hit their stride.
Okay, let's unpack that. Starting with some recent numbers seems like the right place. Microvision's latest Q1 2025 earnings. They reported revenue of just $0.6 million. That's actually down from $1.0 million in Q1 2024. And they also recorded a net loss, $28.8 million or 0.2 cents per share. So when you look at those figures, what story are they telling us about the bigger financial picture?
Well, connecting that to the broader context, it's important to see that despite that revenue decline, they have made pretty significant efforts to control expenses. Their operating expenses, for instance, were down 47% year over year, came in at $14.1 million. And on the financial runway side, they ended Q1 with $69 million in cash, plus they have access to another, $143.4 million in capital. So that cash position, it's quite significant for a company in this kind of capital-intensive sector, especially one still up in product development and market penetration.
So it gives them some breathing room,
It suggests they have some breathing room, to execute their plans without immediately needing to go out and find new funding.
Okay, that cash position sounds like a foundation, maybe a cushion, but it's just one piece of the puzzle, right?
Yeah.
We've also seen other numbers floating around, like a trailing 12-month revenue of only $4.33 million and a net income way down at negative $99.38 million. What do these bigger figures tell us about maybe the health of their core operations and the profitability challenges they seem to be facing?
It definitely raises that important question about their path to profitability. The numbers show a negative gross margin, over 57% negative,
Wow.
and an even more concerning net profit margin, over negative 2,295%. Put simply, it just means the cost of actually generating their revenue is currently much, much higher than the revenue itself, which reflects, the huge upfront investment in R&D and early stage production. They are consistently operating at a pretty substantial loss. Their negative earnings per share even missed analyst estimates in Q1 2025, came in at negative $0.10. And another indicator, their debt-to-equity ratio, is sitting at 56.6%.
Okay, what does that mean in simple terms?
Think of it like this. For every dollar of their own money, their equity, they have in the business, they've borrowed about 56 cents. Now, that's not necessarily alarming on its own, but it does signal a degree of financial risk, especially if capital markets get tighter or, borrowing becomes more expensive.
Right, okay. So we've looked at the numbers. They paint a picture of a company investing heavily, facing big costs, but also having some cash to burn, as you said.
Yeah.
But to really get why those numbers look like that, we need to talk about what Microvision's actually doing. What are they building? What's their core tech?
Okay, so Microvision specializes in MEMS-based laser beam scanning technology. It's pretty cutting-edge stuff. MEMS, that's microelectromechanical systems. Essentially, think tiny, very sophisticated mirrors that can direct laser beams with incredible precision.
Tiny mirrors doing big work.
Exactly. And these tiny components are the heart of their LiDAR sensors. These sensors integrate lasers, optics, hardware, plus advanced algorithms and machine learning. Their main focus is developing these advanced LiDAR sensors for automotive uses, specifically for AS, advanced driver assistance systems, and for fully autonomous vehicles.
So the eyes for self-driving cars, basically.
That's a good way to put it. But beyond cars, they're also applying this tech in non-automotive sectors, things like automating warehouses, port logistics, and even heavy industries like agriculture, mining, and construction. They have products like the MVIS, which is a customizable LiDAR sensor, and the MVIS series, which is more for industrial use.
Interesting. Diversification.
Right. And they also have a really extensive intellectual property portfolio. We're talking 735 issued or pending patents. That was further strengthened by their acquisition of Ibeo Automotive Systems back in 2023.
Okay, so despite those challenging financials we talked about, it sounds like they're making some pretty aggressive strategic plays to actually commercialize this technology.
Yeah.
What kind of initiatives are they pushing right now? And crucially, how are they positioned against the big players already slugging it out in this space?
Precisely. Strategically, they've set up a defense industry advisory board that signals a potential move into new markets, which could be interesting. They also appointed Glenn DeVos as their new CTO. He was formerly the CTO at Aptiv, which is a major automotive tech supplier, so that's a significant hire.
Yeah, that name carries weight.
It does. And crucially, they're actively engaging with automotive OEMs, the big car manufacturers, on 7 high-volume requests for quotation, or RFQs. Think of these like detailed bids for potentially massive multi-year contracts. Landing even 1 or 2 of those would be huge.
Absolutely essential for the auto industry, right?
Totally. But, and this is the big but, they are operating in a sector with some really entrenched competitors. You mentioned Luminar Technologies. There's also Innoviz Technologies. These guys currently have more established revenue streams, existing partnerships with OEMs already locked in.
So Microvision is the challenger here.
Definitely a challenger, not just in automotive LiDAR, but also in those industrial sensor markets and potentially defense, too. It's like a high-stakes race. Some cars are already well down the track, and Microvision is maybe still fine-tuning their engine in the pit lane. They've got the advanced tech, but they need to get into the race properly with those big contract wins.
That's a great analogy. We also heard about a recent retail investor day they held. What was the point of that? And maybe more importantly, did it actually, move the needle at all? Did it change perceptions or lead to anything concrete?
Good question. That retail investor day was on May 20th, 2025. It served as a platform, really, for live demos of their long-range LiDAR hardware and software. They had interactive sessions for investors, too. It was basically designed to showcase their tech advancements directly to the market, especially retail investors who follow the company closely.
Showcasing the tech.
Right. And while it definitely generated more chatter, maybe some excitement on social media platforms like X and Reddit, there hasn't been any verified news of imminent large-scale deals surfacing because of that event. And it didn't really result in a significant lasting positive shift in market sentiment either. It felt more about building awareness and maybe confidence in the technology itself rather than announcing a major commercial breakthrough.
Okay, that makes sense. Let's pivot then to the market impact of all this. The stock price, as of, let's say, mid-June 2025, was down around $1.25 per share. It's a pretty significant drop over the past year. What do you see as the main drivers behind that decline? And what's the general feeling among analysts and the wider investment community?
Well, the stock's decline. It's largely a direct result of those disappointing financial results we discussed, specifically, the falling revenues combined with the ongoing heavy losses. The market is also reacting to the lack of immediate large-scale commercial wins. Despite all the talk about active engagement with potential clients, those big deals haven't materialized yet.
So impatience is setting in.
You could say that. Analyst sentiment remains pretty cautious, generally neutral to negative, precisely because of these persistent losses and the seemingly extended timeline for actually reaching profitability. Now, there is, of course, recognized potential upside if those major automotive or defense contracts finally come through.
Right, the game changer.
Those would be transformative, absolutely. But for now, profitability concerns are really dominating the near-term outlook for most financial observers.
That makes sense. So given this whole dynamic environment, what are the really big risks that Microvision is facing right now? And on the flip side, where do their most significant opportunities truly lie?
Okay, risks first. The ongoing substantial losses, they raise fundamental questions about long-term financial sustainability. Can they keep going without big contract wins or finding new, consistent revenue streams? Then there's the intense competitive pressure. Could that erode their market share? Could it force them into pricing wars that just kill their margins even further? Prolonged unprofitability might also mean they need more cash. That could lead to further dilution for existing shareholders through selling more stock or taking on more debt.
More risk?
Exactly. And there's also execution risk. pivoting to new areas like defense, scaling up production if they do win big contracts. That's not easy.
Okay, lots of hurdles. What about the opportunities?
They are significant. Those active engagements on the 7 high-volume RFQs we mentioned, if they convert even a couple of those, that could lead to transformative multi-year contracts. Huge upside.
Have a big carrot.
That's the big one. Also, expansion into defense, helped by their new advisory board, that could open up totally new markets, maybe ones less sensitive to the fierce price competition you see in automotive.
Less price pressure, potentially.
Potentially. And finally, their deep IP portfolio. That remains a significant strength. It holds immense value if they can commercialize it effectively across these different applications.
Right, the if is always the key word there. Beyond the official reports and analyst notes, there's always the online chatter, right? What's the social sentiment like for Microvision among, say, retail investors on places like Reddit or X? And how much of that reflects the actual financial reality versus just, pure speculation or maybe high hopes?
Oh, it's definitely a classic battleground online, isn't it? Those investor discussions are highly speculative. You constantly hear that refrain about cash burn, the company losing money right next to discussions about how promising the latest tech demo looked.
No, they're the two extremes.
Exactly. Rumors about potential partnerships fly around constantly. But you also sense the frustration among many retail investors. They see the advanced tech, but they're frustrated by the lack of tangible, high-volume commercial wins, the kind that turn cool demos into actual, meaningful revenue. So optimism is often limited to the long-term holders, the ones really betting on the eventual industry adoption of Microvision's specific technology.
It sounds like a lot of noise to sift through.
It is, and it's really important to emphasize that investors are, widely cautioned to verify any rumors before acting. There can be a huge gap between online speculation and actual concrete business developments.
Absolutely critical advice. Okay, so after this comprehensive deep dive, pulling it all together, what does this really mean for someone trying to understand Microvision's current position in the market? Where do they stand?
Microvision, fundamentally, remains a speculative play. Its future really hinges heavily on securing those major contract wins, both in automotive ADAS and LiDAR markets, and potentially making real inroads into defense technology. While their operational streamlining has definitely cut costs significantly, which is positive, investor patience seems to be wearing thin without clear evidence that these strategic moves will translate into meaningful sales growth, and soon.
So the clock is ticking, in a sense.
In a sense, yes. The general recommendation you see from financial analysts, based on the current data, is generally hold or even sell. They're cautioning investors to wait until there's clear evidence that Microvision can successfully make that transition. That transition from heavy R&D spending into scalable revenues, driven by significant customer wins or maybe lucrative licensing deals. It really feels like a moment of truth for their commercialization efforts.
A moment of truth. Yeah, this whole journey of innovation versus actually achieving commercial success, it's always fascinating to watch unfold. What's one big thought, maybe a question we should leave our listener with about Microvision's path and perhaps the wider industry?
Maybe consider this. In these emerging, really high-tech sectors like LiDAR, a company can have absolutely world-class intellectual property, truly innovative solutions. But how much patience, and maybe more importantly, how much capital, is really required to bridge that often vast gap between the groundbreaking research and achieving widespread, profitable commercial adoption?
Right.
What does it actually take for that innovation to translate into sustained profitability, especially when you're up against larger, maybe better capitalized rivals who might have gotten an earlier start in market penetration?
That's the multi-billion-dollar question, isn't it?
It really is. It's the enduring challenge for so many companies operating right there on the frontier of technology.